What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
Hey everyone, welcome to The Last Trade. Today we have a special edition of the show to highlight our recently published report, The Evolution of Bitcoin Custody. It's a comprehensive white paper that walks through the history of custody in finance, Bitcoin's unique custodial properties, fundamentals of Bitcoin custody, evolving custodial solutions, and the incentives inherent to multi-institution custody. You can find the report directly on our website at onrampbitcoin.com, and we will be hosting a webinar on Tuesday, September 10th, to discuss this in more detail and offer a live Q&A to the audience. We also shared more details about the webinar, so you should have found that in the Onramp Research newsletter and our social channels for more information on how to sign up there. So without further ado, to discuss this report and all things Bitcoin custody today, we're joined by Bradley Chambers, an Onramp client and marketing advisor to the firm, and Brian Cubellis, Chief Strategy Officer, who authored the report today. Gentlemen, how are we doing?
Doing well. Great to be here.
Yeah, I'm very excited to have this discussion and hear, how Brian went about the report and the research, given custody so multifaceted. And I think whenever we come into Bitcoin, there's a certain snapshot we start from and then only move forward. And we never really get to go back and hear how we got this far and where we're going. So excited for this conversation.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Absolutely. Yeah, so Brian, maybe we'll start with you then, just because you authored the report, and I could pull up on my screen so folks that are listening through YouTube and other video platforms can follow along. So I'll pull that up now, Brian, and maybe we can just start wherever you'd like to in terms of a high level and get into some of the aims of the report and some of the key takeaways you found.
Yeah, absolutely. Thanks, Jackson. This is an exciting one because honestly, this is a report that internally we had been talking about for many months, and we all sort of knew that this would be a sort of cornerstone piece of collateral for the firm, because it really speaks to, in many ways, why Onramp exists and how Onramp and our solutions for custody emerged. But the goal and the aim of the report at a high level was really to take a step back and say, why does asset custody even exist in the first place? How did the earliest forms of custody emerge? And why did humans coalesce around different forms of custody for assets? And so, if you take it back hundreds or even thousands of years to the earliest forms of custody, there was a notion of, you needed sort of different ways to secure and protect communal resources. And that sort of evolved into the earliest forms of banking, and so different services that get layered on top of, asset custodians. And so, the fascinating part about where we are today relative to, these earliest forms of custody, is that sort of in the traditional world for most assets, it hasn't changed a ton in the sense that most assets are custodied by single entities. And so there's been this sort of inherent trajectory of asset custody that has been prone to different forms of centralization. And so there's typically one single entity that's managing the custody of a given asset. And, for most assets, whether it's stocks or bonds in someone's portfolio, custody is kind of an afterthought in the sense that there are fallbacks in place in case something goes wrong with the custody, whether it's reversing a transaction, papering over losses, or different methods of recreating shares of a business if something went wrong on the custodial end. And that's just not the case for Bitcoin. So Bitcoin has these very unique custodial properties, it being a digital bearer instrument. And sort of the biggest takeaway from that difference is if something goes wrong with the management of the private keys associated with the Bitcoin's just gone forever. There's no sort of bailouts or fallback plans like there are for these other assets. And so if that is true, then custody is really the most important thing for allocating to and owning Bitcoin for the long term, right? Like your investment thesis on the asset, its price appreciation going forward, sort of becomes irrelevant if you can't secure the asset into the future 10, 20, 50 years indefinitely, ideally. You want to have assurances that asset's going to be there in the future. And so because of, these sort of these centralizing forces with traditional forms of custody, we've seen how that hasn't necessarily mapped to this new world of Bitcoin in a super clean way, right? Whether it's Mt. Gox or FTX, there's countless examples of centralized custody for Bitcoin specifically going wrong. And so, that could take the form of negligence, malfeasance, any form of mismanagement where private keys are lost in some way, and the Bitcoin's just gone forever. And so that's really sort of the core differences in terms of how custody has been done for hundreds of years. And I think in the early days of custody, if we're zooming out 15 years of Bitcoin's history, like it's a relatively short period of time, and the solutions we've put forth thus far are you manage the keys yourself, which is a great sort of trust minimized fallback option for people to be able to actually take possession of this digital bearer instrument. And then the other option has been trusting a single party custodian. And so, like I said, we've seen very, countless examples of that going wrong. And so, really a lot of the impetus for Onramp being launched and us putting forth and pioneering this new form of custody is we want to evolve the space in the sense that as Bitcoin's price grows, the market cap gets larger, it's attracting the eyes of larger pools of capital. And those larger pools of capital genuinely are going to need better assurances over their ownership into the future. They're likely thinking very long term about the asset, and they want to protect it and secure it into the future. And trusting a single entity, as we've seen, isn't necessarily the best way to do it because things can go wrong and there isn't a ton of recourse if something does go wrong. And so this concept of multi-institution custody is really critically important to understand sort of the incentives at play when you introduce multiple participants into custody as opposed to just relying on one counterparty. And it really shifts sort of the game theory that underpins custody and shifts the incentives such that less things should go wrong in the sense that if you're a single entity and you're managing custody of Bitcoin, in order for you to quote unquote collude, you don't need to convince anyone. And so you can act unilaterally because you have unilateral control of the asset. And so whether it's, again, negligence or malfeasance, some form of mismanagement, it's just on a single party. And there's, as a client of that single party, there's not a lot of recourse for, holding that firm, that entity accountable, holding them to task to act in good faith. And so by introducing multiple participants, and so how Onramp structures our custody is using 2 of 3 multi-sig quorums, which again is native to the Bitcoin protocol. By introducing other parties, in our case, BitGo and CoinCover, and we recently added another partner in Tetra Trust. By introducing these other parties and having them participate, it shifts the incentives at play in the sense that none of those entities actually have unilateral control. And so they are incentivized to act in good faith because there are other parties involved and there are other parties auditing the blockchain and seeing, looking at these vaults, these quorums that we create for clients. And so you're naturally incentivized to act in good faith because, in order for someone to go rogue effectively, they would need to convince at least one other party to also go rogue. And so that's a sort of magnitude more difficult than one firm convincing themselves to go rogue. And so that's sort of the fundamental shift in incentives and game theory at play here that actually sort of enforces good faith actions. And so that's if there's one or two things to really take away from this report, it's that Bitcoin is very unique, again, from a custodial perspective. And due to that, custody is sort of the most important thing when it comes to having a thesis on this asset and allocating, meaningful amounts of wealth to this asset. And sort of the second point is, the space needs to evolve in the sense that we've seen the pitfalls of centralization, how things can go wrong. And, linking it back to the unique properties of the asset, those centralization forces are even more important for this asset specifically relative to other assets in your portfolio. And so, we think we're pioneering a strategy here which, allows for greater ownership assurances into the future and really the sort of distribution of counterparty risk so that, you can sort of minimize, again, those pitfalls of the centralized custody. So maybe I'll stop there, but that's sort of a very high level of what we tried to achieve with this report and just try to really sort of give people a sense for, this is a very, everyone always says we're still early. We're still early in figuring out the custody of this asset in our minds. And we think this is sort of the next step in that evolution is multi-institution custody, which will actually allow, again, these larger pools of capital to get comfortable with allocating in size to the asset. And just maybe one other brief point is, over a year ago when I joined Onramp, I think I heard Michael and Jesse on a podcast talking about this model of custody. And it really struck me as something that needed to exist because given my prior experience I was at Coinbase for a year prior to joining Onramp. And prior to that, I was in the traditional finance space working at a large bank. And so I was dealing with those large pools of capital that I keep referencing. And there was a natural friction, even if a client or a prospect could get there on the Bitcoin thesis, they understood the appreciation potential of this asset and they wanted to get exposure, they couldn't get comfortable with the custody options. And so those, not everyone thought in a first principles way about this. And some people are just fine, getting exposure via a single third party entity. But for all the reasons we know, there are many ways in which that can go wrong. And so if you have a long-term thesis on this asset and you want to allocate in size, you really do need to think critically about the custody and how are you going to get exposure. And, again, those ownership assurances into the future are critically important.
Yeah, it's a very great recap, Brian. I think one overarching theme that we kind of bring to the table, everybody on this call and as a firm, is there's decades of experience in the Bitcoin world managing assets across Jesse and his fund that he was managing prior to Onramp and me helping build Unchained Capital, and also across TradFi and understanding what is needed in the market. I think it's very much talked about that in Bitcoin, we're going to recreate the wheel. And I think most people here would say we're not necessarily going to recreate it. We're just going to repurpose it and graft a lot of the things that worked to this asset and reduce the counterparty risk. And so if you take that lens to the asset, well, then it naturally has to evolve simply because it started basically worth zero. And so it was okay to use a plastic device to store 100 Bitcoin. And as that grows, you naturally went into passphrases, multi-sig, collaborative custody. There's a lot of different layers and flavors to that. But ultimately, I always anchor back to Jesse's chart that Saylor often uses, the full potential valuation chart of if you think about an asset starting to take more and more. Yeah, this chart's great to illustrate. Like we all believe, anybody probably listening to this podcast, viewing this, believes that this asset is going to grow and take everybody probably has varying degrees of how much of the monetary premium from these other assets, real estate, equities, bonds, money. Well, we have to extrapolate. Well, then that means there's a bunch of other things that need to occur, financial services, bad actors. And so we have to evolve that custody situation. So I think multi-institution is a natural evolution in this step. I like to think about it as a 6-figure product in the sense of like when it's 100K plus, everyone's going to fully understand and grok the gravity of having plastic devices on their person and in their home. And so, yeah, that was a great recap, and just wanted to frame around where we're going and the importance of securing. If we think we're going past 100K, there needs to be redundancy and fault tolerance. And you're also going to want to live in a world where there's financial services that exist, and you don't have to like maybe go into a dark room or cave to get access and be tracked while you do it.
Yeah, and to add on to that, I guess this is sort of a thought I've had more in the last 6 months. I think that Bitcoin's multi-institution, multi-sig capability is part of how it ends up winning. It ends up becoming a preferred store of value. It ends up taking a larger slice of the global asset landscape because it has this ability to have a lower risk form of custody than anything else out there. And so capital is going to gravitate towards that as capital is looking for a good store of value asset. You're looking for performance, but you're also looking for risk mitigation. You want to know that you can reliably expect that capital to exist in the future without hacks or insolvencies or any funny business from a single custodian. And so I think multi-institution custody is part of how Bitcoin wins. And that is, I think, something that the Bitcoin landscape in general is not really thinking about yet at all. But multi-institution custody is this, multi-sig unlocks this ability, this capability for Bitcoin that makes it grow into becoming the best store of value in the world. And this is, one of the things that I think we're going to see as a major tailwind over the next decade for Bitcoin and for Bitcoin custody is multi-institution custody taking more and more risk out of holding Bitcoin, and therefore more and more capital saying, what Bitcoin looks like, not only is it outperforming everything, but it's now becoming less risky than the assets I'm currently holding from a custody perspective. So, it's time to allocate more. And so I think this is not yet understood about how Bitcoin becomes central to how the mainstream stores value.
Yeah, it's a really good point. And the other thing I would sort of emphasize, and this is something I mention a lot, is that Bitcoin as an asset, as a network, is genuinely one of the more decentralized things we've ever seen, right, as a human species. And that's very core to its value prop. Why you would even be interested in Bitcoin from an investment perspective is its decentralized, distributed nature. And so if you think about what we've seen over the past 15 years, and even with the launch of these ETFs, it's like, does it really make sense to centralize the custody of a very decentralized asset? No, it doesn't, because if you want to honor the ethos and the principles of that asset, of that network, you should try to also distribute ownership of the custody. And like Jesse's saying, Bitcoin has this very unique ability to do exactly that, right? And so, Michael, one of the things you always say, which I love, is like, you can't multi-sig gold, right? But if you could, that'd be pretty attractive, right? Like, that would be a better way to hold gold if you didn't have to trust one single vault and just hope that the gold was still there.
And that would remove the Achilles heel of gold,
right?
Which is that it ends up in a single vault, and then you get funny business based on that.
Exactly.
Well, I look at it too. Like, we talk a lot about the ETFs a lot, and how, like, I believe they're a subpar product compared to holding the actual Bitcoin. But there are people that's how they can only buy Bitcoin, and that's okay. But even if you had an ETF that was held in multi-institutional custody, it would be a better ETF. So it's not even that I would say like an ETF wrapper is bad or is a bad investment. And we can get into the nuances of taking ownership of the Bitcoin one day. But like, if you knew it was like not held with a single entity and it was held in multi-institutional custody across multiple entities, well, that'd be a good product, and that would be attractive to people, because I think there is this notion of like, oh, the ETFs are quote unquote easy, and they are. Like, you already have a brokerage account like that. That is easy. But if you just think through, like, actually, how was that custodied on the back end? It's not great. It's fine. I mean, it's not, it's not, in some ways it's, it reduces the attack surface on you personally, but like there is still a centralization of that asset it could be much better with multi-institution custody.
Bradley, can you, we kind of we did a quick intro, but maybe share a little bit of your background. One of the favorite parts about our conversations internally that we have is, I don't know if you would call yourself a student, but I feel like you've studied the internet wave and adoption and how what's happening here in Bitcoin is very similar. There has similarities, because I think that's helpful in understanding this lens of what we're talking about. And what I'm driving towards is effectively like multi-institution. It's one thing, and I think individuals will be like, oh, that kind of makes sense. But I think for it to really make sense is to go back to the anchor point that I think that has kept most Bitcoin safe, which is going to take this relearning that we are going to go into Bitcoin's monetization with everybody holding these keys offline on their person in their home. Because I think that is a very novel thing that is still not picked up. And it makes sense because historically, if you're telling somebody something that's not offline cold storage, it meant that you were getting scammed or there was a central point of failure. And that's radically different in this setup. And this is why it takes time, because if everybody was telling you they have a better solution, they would be taking your Bitcoin. But I think Bradley's understanding that very early was helpful, and even me just realizing how right we were. He had this notion that said, I like Onramp because I'm going to butcher it, but it was about believing in a positive version of the future, or like, I don't know, Bradley, you could probably share it better than I can.
Yeah. So the backstory on the quote, and I'll run through my history in just a second, was I want to live in a world where we still trust institutions. And I really see multi-institution custody as a great option for holding massive amounts of Bitcoin in a secure way. And I really believe in a world, I mean, you all probably have used the technology Plaid, where you can like securely log into your bank with a different firm. And it's really cool technology. I want to see that for like long term, for like you can pick your key holder. So maybe you have like a local bank. Like, I'm a big believer in local banks. Maybe you have a local bank and you want that to be one of your key holders for your custody, and you can only initiate transactions in person. Like, I think that would be awesome. And so like, I don't want to get in a world where we don't have any trust, because, even if you say hold all of your Bitcoin in self-custody, there is still trust in your world. You're still trusting your butcher. You're still trusting the water company. Like, you can't get to a place where like you think it's going to be like Mad Max style. You're walking around with machetes, because if that is the case, then like we just have a whole other set of problems. And so, but just to back up and talk through my history, I have been a big believer in the internet since, long as I really can remember. Like, I was on Prodigy back in the day. I'm going to age myself, but like, I remember I was paying for AOL. My parents were paying for AOL when it wasn't unlimited. So I've really grown up with technology my entire life. My first job while I was in college was working at an ISP doing tech support. And I always tell people, like, that's a very humbling experience, is doing ISP work and doing tech support, because you really understand how regular people grasp technology. People on this call, like, we're all probably more the tech savvy people in our families. We are the exception. Like, the average person, they don't want to worry about how they get to the end result. They just want the solution. They want to buy something. And so I really come at Bitcoin from that mindset of like looking at it as a technology evolution and technology adoption, much as in the same way the internet happened. But at first, so just to back up and talk about my Bitcoin journey, I should have gotten it like in 2010. Like, I should have gotten it early on. Was always, on the cutting edge of technology. In fact, I guess I can probably say this now because it's been long enough. Like, my side hustle in high school was burning mixed CDs for people that I downloaded from Napster. It was a great business. This was like in the late 90s. It was I charged $2 a CD and $1 a song. And so like, I've always kind of been on this bleeding edge of technology. But I should have gotten it going earlier. I didn't. I don't know why. I just didn't. But where it finally clicked for me was in late 2020. I was listening to a podcast called Business Casual. It's on the Morning Brew Network. It's a great newsletter. And the Winklevoss twins were on there that founded Gemini. And that was like the first time I'd actually ever heard somebody explain Bitcoin, and it immediately clicked. I remember I was ironing some clothes in my master bedroom at the time. I was listening to a podcast. I've been listening to podcasts since 2003. Yes, 2003. And it just immediately clicked for me. I'm like, well, this changes everything. Like it was such an eye opening. It just immediately clicked because they explained it in a way with the limited supply. So I should have gotten much earlier because I was always a big believer in that the government was spending way too much money. I voted for Ron Paul in multiple primaries. Like I understood all that was happening in our country. So I should have gotten earlier, but it didn't. And it's the old adage, you get it at the price you deserve. And I got it at the price I deserve. But I think what helped me is coming to Bitcoin in 2020, 2021, because I'm afraid had I come in 2014, I would have been a trader. And I would have said, well, I bought it here. It's now here. I would have tried to kind of quote unquote make money and not understand that Bitcoin was the money and that the goal was to accumulate more Bitcoin, not necessarily just accumulate more dollars. So I came at it at the right time. And one of the things that really helped me on my journey was understanding Bitcoin as a protocol for money. And again, so back up again, I've worked in technology my entire career, 20 plus years. And my career has been built on the backs of protocols. SMTP, protocol for sending communication around the world at the speed of light, essentially for free over email. I think SMTP is one of the most incredible technologies in the world. I could send a message from here to Australia, over multiple email providers, different applications, but because we're all talking to the same protocol, it works. TCP/IP, HTTP, like these are all technologies we use every day, and these are protocols for technology. Bitcoin is a protocol for money. And so what that means is like there will be different ways to use Bitcoin. There will be different ways to custody Bitcoin. There will be different ways to adopt Bitcoin, and they're all fine. And there's no right or wrong answer, just as like there's no right or wrong email client. Like you can just pick whatever client that you want and you can use it with your email provider and you can talk to anybody around the world. Bitcoin, I think, will operate much the same way, where you will have different flavors of custody for maybe different amounts of Bitcoin and different things. Some people want to hold it this way, some people want to hold it that way, and it's all great. And we all grow together. Just as in the same way, like our apps have changed over the years. The way we interact with technology is different in 2014 than it is in 2024. Like all these things have changed. I was talking to somebody last week and we were talking about like, well, Bitcoin is never going to do X because of some limitation today. I said, you forget, like, I don't know if you guys on the pod, like remember had the first iPhone, like the first iPhone couldn't even send picture messages. Like it only worked on Singular here in the US. And again, I'm going to date myself. Like it only worked on Singular. It literally couldn't send picture messages. Something that is like core today to the like mobile experience of sending messages over text message and whatever chat app. Couldn't do it. The way you got a link front and then you had to go and you couldn't copy and paste and you couldn't click on it. So you actually had to just like manually retype the URL into Safari and view the picture message. And so people think, oh, well, Bitcoin will never do this. It's like, guys, we were not that long ago. Like you couldn't even send picture messages on the iPhone today. So like, don't underestimate like what we can build in the short term. Because I remember when like loading a 3 meg audio file on AOL took hours. Now you can view that, in half a second on your phone. Like we really, really overestimate what we can do in maybe a few months, but we are vastly underestimating what we can do technology wise over the next, 12 years.
Bradley,
there's this
fascinating perspectives. And, I think to your point, like we're 15 years into Bitcoin and a lot of times we like to think that we have it all figured out, right? Like we have the solutions that we want to point people toward. And, we pretty much think that we've solved a lot of problems that already exist. But the reality is we're kind of in the internet in the 1990s, right? Like, as you pointed out, there were a lot of things that we kind of took for granted, even in the 2000s as it relates to the iPhone, some of the things that I didn't even know personally. So like, how do you kind of think about now? How do you think about where we are today with Bitcoin, right? And the technologies that exist? Maybe you could also walk through people like over the past 4 years, what are the different technologies you've interacted with from, signing devices and running nodes and, exchange experiences? Like what are the different technologies you've interacted with on Bitcoin, and how would you kind of equate where we are today in Bitcoin to where we would be in the internet adoption?
I really believe in probably like 1992, there were probably people like us sitting around a restaurant somewhere talking about the internet and what it was going to be, and they all sounded crazy. and they were all crazy, but they were all right. And I think there is an aspect of like, we often feel like when we go like talk to people that like don't understand Bitcoin, we sound crazy, and we are crazy. We are implementing a new, world reserve currency slowly but surely. And so it does sound crazy, but everything about the internet sounded crazy then. I mean, the good example is like, we were always told two things, growing up. Don't meet people from the internet. Don't get into a stranger's car. Well, that is the business model for Uber and Lyft. So like things can change over time, and it is still the early 90s for adoption. Again, what we were doing with the internet in the early 90s and the mid 90s was amazing. Like, I remember one of the other things I did as a side hustle, like I built websites for people. These websites were awful compared to today's standards. And people were arguing then about like the best way to build websites, just like they are today. But like the technology just gradually came about. Again, taking credit cards on the internet in 1995 was really complicated. Today, it's super easy. Like, it's a turnkey solution. You can use Stripe, or you can use any other, you can use Square. So there is this like mantra of, we kind of get frustrated in the moment of like, why do not more people get this? Like, do you not think there were probably people like watching, Amazon in like 1996, 1997 IPO saying, guys, this company's going to take over everything. And again, like they did, and they were right, and they were up and down, and the number of times their stock has drawn down over time. Like, yeah, they did, but they had this like long-term thesis. Their long-term investors like understood, well, the internet's going to change everything, and then mobility changed everything, and then cloud changed everything once again. So like, if you just have this, like, where the end result is, the journey along the way can be a little bit bumpy, but like, we will figure these solutions out. So like, when I hear people say, oh, Lightning doesn't do X, like, okay, we'll build that. Or this doesn't do this. Okay, we'll build that too. And it's like being mad in like 2011 that like multi-institutional custody doesn't exist. Like, it didn't need to exist in 2011. Just like things that we don't need today, like Bitcoin's not going to take over, all credit card processing tomorrow. So like, we don't have to have the technology to do that today. We will build it as that comes, and like, problems for this present themselves, and we will build solutions. And like, we've done that with technology over the years. And it's like, everything with technology is not solved today, but like, when new problems crop up, the free market figures it out. And like, okay, how can we offer a solution? How can we offer this? And I think too, you have to, with Bitcoin too, until you really understand the problem that Bitcoin solves and you feel that problem, I don't think people are interested in the solution. Outside of like, maybe this is a speculative asset that might go up in terms of dollar values. I think the critical thing for people with understanding of Bitcoin is they have to actually understand the problem that we have today. And again, right now within, everybody's feeling inflation. So like, they're starting to understand that more, but it's also like putting a lobster in a bowling pan. Like, you don't fill it right at once. As it gets hotter. And I think that's kind of where the world is, particularly here in the US, is that water is just getting hotter and hotter and hotter. And we've come around in the past 4 years, and like, you look at the price of groceries, you're like, this doesn't feel right. This is frustrating. Like, what actually is the solution? And some people want to get mad, and they want to, blame politicians. They want to blame this. They want to elect somebody else. And like, we're all here saying like, we're just going to invent some better money. And we're going to and this is a better solution for us. And I think it's actually freeing too, when you really understand it. Like, again, what is Bitcoin going to do in USD prices today, tomorrow? I don't know. But do I think 10 years from now it's dramatically higher? I do. And the only way, people say like, what is the risk of Bitcoin is like, government stops spending money. I don't see that happening. There's no talk of governments like actually stop, deficit spending. So if that's the case, I'm just going to save in Bitcoin. And it's like freeing and simple, but you get to that almost like Zen-like moment where you're like, I can be mad about all the things that are wrong in the world, or I can just go out and seek out a solution to my problems. Yeah, but going back to custody, I've tried all different flavors of custody, and again, going back to the protocol, I think they're all fine. I think there are reasons to have a little bit of Bitcoin on exchange. There's reasons to have a little bit of Bitcoin in an iPhone app. There's reasons to have a little bit in collaborative custody. But I really kind of came to multi-institutional custody from this mindset of like, what works 30 years from now? Because I look at Bitcoin as like a generational asset that I want to have in my family forever. And I have hardware devices that I tinker with. I love tinkering with stuff. But when I think through like actually what scales Bitcoin to the rest of the world, I look at it as in some ways like how email grew. Again, in the 90s, like there wasn't like Gmail in the 90s, because I remember when Gmail launched, like, people were selling invites on eBay. Really, the first mass market email service was Hotmail. And it was so popular, Microsoft bought it. Because prior to that, these mass market, you had to run your own email server. And like, that was fine that existed. And it was a reason some businesses ran it. That's how they did it. And some people still do that. And that's great. Like, but email is a protocol, so people can use their own email server. But what helped email really grow dramatically were companies offering solutions to interoperate with that protocol. So again, you had Juno. I guess I'm really aging myself now. You had Mindspring. You had Hotmail. Then Gmail came along. Apple, iCloud. You had Yahoo obviously in there. And again, then solutions came out where it's like, hey, you can run we're going to run a Squirrel Mail. We're going to host it for you. It's another open source platform, and you can choose your own domain. Like, there are 1,000 different ways to interact with email. But what do we all know about email? If I have your email address, I don't have to think about what email provider you're using. I just send you a message. The apps handle it. The protocol handles it. To me, I look at Bitcoin like that. So that's going to be how Bitcoin scales. Is there's going to be different ways to interact with it, and they're all right, and they're all positives and negatives, all of them. And I think too, like, when you get dogmatic about different, you get opinions and say, well, this is the only way to do X. Like, well, maybe that's the only way for you to do X, but like, another person has different hopes and strengths and weaknesses, and like, they don't want to do that. And I think that's what I love about multi-institution custody is it's a way to hold large amounts of Bitcoin in a way that is easy, scalable, and secure. And again, I love the inheritance piece to solve with it. I don't have to worry about keeping, plastic devices and plugging them up. And again, do I still hold a very, very small amount of Bitcoin in self-custody? I do. But like, over time, as I migrated to Onramp, I started out with a little bit, and over time I realized like more of this needs to be in multi-institution custody, because this is the future. This is the most secure way. This is the most scalable way. And this is a way you could tell your neighbor, the person that delivers your mail, the person at the coffee shop, like, multi-institution custody is scalable for everybody regardless of their technical level. Can I view my Bitcoin on my own node in my house? I can. But does and as family member that doesn't, even care about technology, do they want to do that? No, they don't want to, but it's like, it's important they can, but they don't have to. And that's what I'm such a big believer in Onramp's technology, is because it is a way to, onboard billions of people to Bitcoin in a way that a lot of people are just never going to hold their own keys and physically hold them. They can legally control them with institutions spread out across multiple jurisdictions, but they actually don't have to have USB keys where if something happened to those, if they did that wrong, that they've lost their wealth. And again, it's important that people can do that from the protocol's sake, but the vast majority of people are not going to hold their own keys physically. And I know that may be controversial, but I've watched technology adoption long enough to know, just like most people were not going to run their own email server, they wanted a solution. And Gmail, iCloud, Yahoo gave them a solution. They need a solution to securely and legally hold Bitcoin in a way that's easy.
Yeah. You paint such a good picture there, Bradley, of like, you said multi-institution custody wasn't needed in 2011. I think that's an important part of this too, of like, as the evolution of custody, Bitcoin custody has progressed, it's based on need, right? Like, who held Bitcoin in 2011? The cypherpunks and related parties. And it was a speculative thing that you knew you were like way out there, and you weren't really betting the farm on it, and you weren't relying on it, right? And then now move forward in time, as the value of Bitcoin has grown, people have started to base their financial world around Bitcoin. Some people, right? Some people who have been comfortable enough with the technical demands of self-custody in particular, and multi-sig custody in particular, over the last few years. But that requires a lot of technical know-how, in the same way that the email story has, you painted a great picture of how that tracked over time. Of we think about how the progress of technology involves the simplification of UI and UX. But I think underneath that surface, there's a whole lot of technical simplification or I guess removal of the user from the technical requirements involved in connecting to the internet, getting your own email, setting up an iPhone back in the day was a lot harder than it is now. Anything, and so making UI UX easier or better and also as a big part of that, making the tech requirements simplified and shifting the burden from the user to companies who are helping the user is a big part of how technology goes from the bleeding edge innovators through the early adopters and into the mainstream. And that's the story playing out again with Bitcoin, the evolution of Bitcoin custody here, where as people are starting to center their financial world around Bitcoin, we needed a better solution to remove some of the technical burden from the individual. Because if you set up a multi-sig, if you set up a collaborative custody multi-sig, that's kind of the best in class before multi-institution custody, in my opinion. And in that scenario, you still are responsible ultimately for the majority of the keys and how that material is held. So you could screw it up. And that is comfortable enough for some people and pretty uncomfortable, I think, for realistically the majority of people. Most of those people haven't adopted Bitcoin yet, in part because of this. In general, they're less technical. And so, cometh the hour, cometh the man sort of idea here of like, out of necessity and what's possible with Bitcoin, you develop the next step in the evolution of Bitcoin custody to reach the next group of people who, by making it better UI, UX, and removing a big chunk of the technical burden from the experience overall. And that next stepping stone is multi-institution custody. And I think it's really more than a stepping stone. I think it is ultimately the format that is the end state of where this goes. Of course, there will be a ton of innovation, with multi-institution custody and what it ends up looking like. But from a conceptual format point of view, you've now risk mitigated about as much as you can. No solution is absolutely 100% perfect, but with multi-institution custody, you're an order of magnitude better than any custody format in the traditional world. So I think that's about as much as you can hope for.
I think it's really well put. Like, there's a couple themes that have come up here. Jesse referenced, as we center more of our lives, our net worths around the asset. Now you have to start thinking about it from a first principles perspective of risk and how do you secure it. And Bradley referenced how, he should have got Bitcoin. He didn't. There's a lot of people that should, but there's this subconscious notion, and these are obviously on the different sides of the spectrums, but if you ask or poll, the grandmother or parent, what do you know about Bitcoin? It'll end up in these two spectrums of, it's kind of cool, but North Korean hackers will end up with it, or it'll end up in a hard drive in the UK or wherever the hard drive, the infamous hard drive ended up. And so it naturally, everybody knows these growing problems of inflation, the stored value, having to pay, multiple advisors, all the things associated, but they can't really look at the asset, even though they believe it's the best performing asset, even if they know it, simply because it's like, well, even if I get it, what do I do? Now I have a bigger problem because I have to reframe my mind and also figure out what to do with this asset. And so now you start to naturally, for the past 15 years, I joke and think like, we're so early to Bitcoin, we haven't even figured out how to actually custody it, that everyone has taken these insane trade-offs. And Jesse, you put it nicely, it's like, I can guarantee you everybody that holds their own Bitcoin has a level of, from 1 to 10, uneasiness with it. It's just how far, right? You're using collaborative custody. Well, if you leave the country, are you traveling with keys? Well, that's a problem. Are you not traveling with keys? That's a problem as well. And we've gone in through the inner workings of this, onboarding billions of dollars. It was the best that existed. It's not to take away from it. It kept Bitcoin off of BlockFi, it kept Bitcoin off of Celsius, but people also kept Bitcoin on BlockFi and Celsius because they were too afraid to get set up with collaborative custody. You got hardware devices, you got multiple C phrases, you got wallet config files, you got to make sure they're all right, you got to make sure they're not all sitting underneath your desk, which guess what? Most people have them sit under their desk. And so that's this notion of, and to Bradley's point, there's no one size fits all. It's how you keep the system honest as you have self-custody ability to take delivery. But then ultimately where we're going is you want to trust third parties. You want to be able to live in a world where you can access financial services. Somebody can pick up the phone, answer an email if somebody passes away, and there's death certificates and the right precautions that are provided, along with a bunch of other things. So everything we get really passionate and excited about this is because we just look at this space for so long. And when you see what we see, it's like, wow, this is effectively what Jesse's kind of aligning the future. And now you get to start building all the products and services on top. And the market gets to, kind of catch up, because at the end of the day, game theory plays in here, where clients come to us, and then clients of large institutions come to us saying, hey, I want to move my assets over. Will you participate? And if they say no, it's like, well, you're losing all the assets versus participating in one of the keys. So it's a really exciting time, and really exciting for the evolution of Bitcoin as we think about it going into six figures. It's one of those things where multi-sig and collaborative custody had to exist as a prerequisite to this, because I don't think most people would understand a 2 of 3 model. They'd be like, wait, what's happening here? But now that existed, so that's enough in the like mind share, and so it just kind of now evolves into this next evolution.
It's a protocol too, and I think that's the beauty here.
Just to add a little bit onto Michael's thing to make that actionable, for a lot of people, so far we've been painting a picture of like, this has been the evolution of Bitcoin custody, and into the future it's going to shift more towards multi-institution custody. But for the individual, to make it actionable, that can be you now. You can take the step from self-custody or third-party custody. If you still have coins on Coinbase and you've been afraid to set up your own self-custody, well, here's the solution for you. And that allows you to reap the benefits psychologically, and also the risk mitigation benefits of multi-institution custody that we've been enumerating. And what that ultimately allows you to do, and we've heard this from our clients, is that it allows you to feel like you're more secure with your Bitcoin, and that you can start to shift your mindset about your Bitcoin position from, it's this thing that I think is going to work out, but I can't rely on it because I could screw it up, or I need to have other things to trust, other pillars that are the majority of my portfolio, for example. To shift from that model to a mental state of, this is actually the most secure thing in my portfolio. I can rely on this position, and you can start to transition your mental model of what Bitcoin means in your portfolio accordingly. And I think that's like a hidden and rather powerful transformation that we see with our clients of Bitcoin goes from this speculative, hopefully it works out, to, I now live in a Bitcoin standard world for my personal finances. And that is the heart and core of how I've organized my financial world. And I can rely on it because I am using this model of custody that is better risk mitigation than anything else out there.
Well, and that was my journey to moving, nearly all of my Bitcoin to multi-institution custody, as we had some international travel. And again, I had keys separated by many, many, many miles, but I just look at these keys. I had one. I don't know what to do with this. So where do I store this while I'm gone? Do I take it with me? And that was one of those like mental journeys I took, was like, okay, over time, it made more and more sense to rely on multi-institution custody. And again, I'm sure somebody's listening to this and be like, Bradley's wrong for like all these reasons. And that's fine. I can be wrong for you and right for me. And this is because, again, I frame everything through technology. We can have differing opinions on like the best way to build a website because there are web standards. Like, somebody wants to use Squarespace because they just like don't want to deal with managing a server. That's awesome. Go build like you can build a $1 billion business using Squarespace. Some people are like, I want to code it by hand and run it on a server in my own data center. That's awesome too. Like you can go do that. There's nobody stopping you to do that because we all agree on the rules of web standards. Everybody can come at it with their own opinions and offer varying solutions to the market. And they can all be right. And it's just people's differing level of experience and know-how and desire to tinker and to, like, all those things are right. Just as if you said, hey, Brad, like I want to I actually have all of my Bitcoin on a single sig that I memorized in my head. Okay. Like that's, if you want to do that, that's fine too. Like that works because we all agree on the rules of the protocol. You can do that. I wouldn't do that, but like somebody else can do that. If you said, hey, Bradley, I'm going to use collaborative custody. That's awesome. That's great too. We can all use the same, you can send me Bitcoin, I can send you Bitcoin back, and somebody can send it from Coinbase to me. Like, because this is a protocol. And again, this is where I think for a lot of technology people, it maybe hasn't clicked yet. Like if you built your business on the backs of TCP/IP and SMTP and HTTP, like this is protocol for money. You can do things with this, and it doesn't matter what country you're in, what services you're in. You can just send it back and forth and not worry about that. And so that's where, like, you find the custody model that scales for you with your own level of comfort. And you have to think through, like, how do I want to be managing this Bitcoin in 10 years from now? If it's 100x in value, do I still want keys in my desk? You may be okay with that today, but like, be thinking like, okay, if Bitcoin suddenly went to $1 million tomorrow, and it's probably not, it'd be great if it did, be interesting. But like, would you feel comfortable with your current custody model? And I suspect most people wouldn't. And maybe as, a next step for a lot of people, if they are very tech savvy today, is like, hey, I have this amount of Bitcoin. I'm going to shift 30% of it to multi-institution custody. And every time the price goes up more and more, I'm going to move more and more and more over here because I don't want to have that level of risk in my possession, in my house. I personally do not want to be able to sign transactions. Just full stop. And that may be, some people may think you don't understand Bitcoin. I think I understand it enough to know I don't want that risk, that I can, if someone sees me out and hits me with a wrench, I don't want to be able to sign that transaction right there. That's my mental model. And people could say you're wrong, and that's okay. But that's the beauty of Bitcoin, is we can have differing opinions, and what scales for you and how you want to use the protocol is different than how I use the protocol. Just in the same way as I'm not wrong to use Squarespace to build my website or Wix, and you're not wrong to code it yourself. And that's a helpful way for me to frame it. This is a protocol for money with a known supply that we can send anywhere in the world, and we will all use it in different ways. And as new problems arise, there will be new companies that solve new solutions. And so again, going back to like, are there things about Lightning that can be better today? Sure. When we'll fix it though, like we'll make it better. Companies will come along because again, we're operating as a protocol here. We can, as an industry, drive it forward just as in the same way, like the way the internet worked in the late 90s. Like it was, I don't know if y'all have ever seen the video, like on the Today Show in like 94, they're like, what is this @ symbol? Like this is 1994. And then in 2007, the iPhone launched. A lot of work happened between 1994 and 2007 to get there to where we put a pocket computer in everybody's hand and it can go anywhere in the world. Like that's, if you don't remember how the internet was adopted, you probably, are shocked that more people don't understand it. But like people just didn't get the internet. I mean, again, even after like the .com bust in the 2000s, oh, the internet's a fad, this, that, and the other. A few years later, we have the App Store that's changing everything. And two, it is very hard when you're outside of the industry to see it too. I mean, people say, like, well, how did every retailer not understand e-commerce? Like, I don't know if y'all knew this. Like Toys R Us outsourced e-commerce to Amazon. Did y'all know that? Like they just completely Toys R Us did not have a website early on. They outsourced every bit of their e-commerce to Amazon. Well, in hindsight, that sounds not smart because you could see what would happen. But at the time, it just didn't make sense. Toys R Us was like, well, we don't understand this, so we're just going to let this other company do it. That's just what happened. And again, obviously, like in hindsight, that was a bad decision. But it's hard in the moment to know where the future is going to go, especially if you just aren't forward thinking.
Does your Bitcoin custody setup keep you up at night? Maybe you still have coins sitting on an exchange worried about hackers. Or maybe you've set up your own self-custody but don't feel safe with your Bitcoin savings stashed on a little plastic device in your desk drawer. Gain peace of mind with Onramp and our multi-institution custody solution. Here's how it works. Onramp creates a dedicated multi-sig vault just for you. 3 separate institutions each hold a key. Onramp, BitGo, and CoinCover. But none can move funds unilaterally. Instead, only you have control over your coins. With Onramp's multi-institution custody, you'll sleep better at night knowing your Bitcoin is stored with best-in-class security on-chain with fault-tolerant multi-sig. If you believe your Bitcoin is going to be worth a lot someday, don't jeopardize that future by exposing your coins to hackers on exchanges, $5 wrench attacks in the real world, or perhaps most importantly, the risk that you might screw something up with a highly technical self-custody setup. Onramp's multi-institution custody eliminates single points of failure, reduces your personal attack surface and technical burden, and provides access to financial services that allow you to confidently secure your Bitcoin, including inheritance planning, insurance-backed warranties for all balances and transactions, low-cost trading, and more. Bitcoin is a once-in-a-species asset. Secure it right. Learn more at onrampbitcoin.com.
Yeah, I think there's a lot there when you just like look at the trajectory of the internet in the sense of, most people don't have to understand a lot of this. Where we focus heavily on education is because there's a certain segment of the entrenched minority that has to understand this stuff, and then the rest will pick up the standard that ends up winning. I think we're still in that phase. I think one of the things that we've seen, just like inside baseball at Onramp, is that we focus on education and a lot of this stuff because ultimately you can't get to multi-institution until you even understand why Bitcoin, and you can't even get to why Bitcoin until you understand that it's risk off, not risk on, which most institutional investors are still thinking about as a speculative asset similar to crypto. And so there's just still a lot baked into a lot of this. I want to share one thing, but before that, just like from an actionable perspective that Jesse and Bradley shared is, if anybody's interested in this stuff, reach out, sign up. There's this notion, I don't want to call it magic, but I'll use it as like that term. Any sufficient technology is indistinguishable from magic. There is something very incredible about setting up an account and having a video verify with multiple institutions and know that people with armed guards and security are in different entities in different locations signing transactions on your behalf. Like that's never existed. A bunch of people are working on this stuff. We're excited for other people to have multi-institution in the space. There's a lot of there's a lot of things that go into it. And the keys are yours. It's very misunderstood, but these keys are offline. BitGo's trust the company the only time they've ever taken a key offline that houses ETFs, Onramp, now Tetra, and then CoinCover. So I would encourage anybody to try that out. The keys are yours. You direct control. You have legal relationships. But the thing that I think is outside of Onramp, just a market structure thing I want to share because nobody talks about this, and this is just like important if anybody cares about the asset, is ultimately, we said that people aren't comfortable with their self-custody. There's this like grander notion that's even just as kind of like wild of a statement, I believe to be true, is that both sides of custody that exist that house majority of the Bitcoin take insane trade-offs, and nobody ever talks about how Bitcoin can monetize, and we all believe it to be worth tens of trillions of dollars, and nobody ever brings up that both models here are not feasible. It is there's no way it can happen. Self-custody, there's no way institutions are going to be able, from a fiduciary perspective, hold their own keys. That's why Onramp exists. We saw it time and time again, where those high net worth individuals to businesses, institutions, they cannot just get around the fact that somebody can move with hardware devices outside of the platform or wallet config file. And then third-party custody, I mean, this is ultimately why gold failed. You cannot have a centralization of an asset that competes with money and have the ability with somebody with firearms and government agencies to take the asset. So nobody was talking about this. And we saw in 22 this notion of the smartest people in the room, weren't the smartest people, whether it was Grayscale, whether it was the exchanges that blew up. And ultimately, nothing else came from that other than a few people got slaps on the wrist, but everybody's still leveraging the same third-party custody. Coinbase is even bigger now. So I think that's just a more important thing outside of Onramp is really doing a hard look of like, how does this asset really scale to be the asset everybody wants it to be if there's the two options that exist is third-party custody or self-custody. And I don't think that gets talked about enough because it's a little bit less of like us showing the solution and more of just like there's an actual fundamental problem that if it doesn't get fixed, I don't know how Bitcoin can actually win.
Yeah, and speaking of trade-offs too, Michael, and all the different personas that we've discussed today, one thing that's often overlooked is inheritance, right? Because, Michael, even the persona you describe where it's a technical user, maybe on that scale of 1 to 10 in terms of the amount of pain or discomfort they experience managing their own keys, maybe they're a 1, a 2, or a 3. They have a very low amount of discomfort managing their own keys, but often what we find in conversations with clients, one of the main things that concerns them is they all view Bitcoin as a multi-generational pursuit, as the four of us do as well. And to take a trade-off and have a gap in your financial plan where if something happens to me or something happens to client and there's not a seamless way for their family to access that wealth, that is a massive trade-off. That's essentially accepting that all of the work that you've done to understand Bitcoin, which is often hundreds or thousands of hours for an individual, and then all of the capital and choice they've made to use Bitcoin as their preferred savings vehicle could all be lost in a transition of that wealth. And that's really, in my opinion, a very unacceptable and irresponsible trade-off to make. So unless someone feels like really bulletproof that their spouse or their children will actually be able to access that wealth, and they've also addressed the legal title issue, which a lot of people haven't done with self-custody, then they're really taking a ton of risk there, which could, unfortunately, like, people don't like to talk about it, but it can really put someone's family in a terrible situation financially.
It's a great call out because again, thousands of conversations have come into these products and how we think about them. And there's these two overarching themes that I think the audience a lot will resonate. Is generally it's a male that's the allocator, the one holding BTC. And generally what I'm finding is they say it to me. I've never heard it out loud. It's just like, my wife is fine with the allocation, but is not fine with, wants nothing to do with the asset. So it's like, it's on you. And it's a difficult spot to be in because, again, if you go back to that last image that showed third-party custody or self-custody, you can't leave. We all know you can't leave it on a third-party custodian. You'll more than likely outlive the third-party custodian historically. But then the alternative is what Jackson's referring to, is you're effectively leaving a treasure map and hoping your family can find the asset, which I guess made sense because it was the first 15 years, but there needed to be market structure that developed. The other thing that's worth referencing, and it reminds me of trusts, revocable and irrevocable trusts, and how we put them off in the same way that we think we put off inheritance. Is mortality becomes real as we get older. People get sicker. And I remember this from clients previously, and here where I was just on the phone with somebody whose father passed away this morning. Didn't pass away this morning, but I was talking with the gentleman whose father passed away, and he was down, but also understood he needed to get set up because it's like he stored all his value. This is significant wealth. And he's like, I can't be in a position when you go through that. So mortality starts to become increasingly real. And it's just like, well, what am I doing here? So those are two good call outs, Jackson.
And that speaks to you making Bitcoin a more reliable, a more robust part of your financial planning and financial reality. Because in 2011, it was the cypherpunks and anarchists and who were young single males who had some, Bitcoin allocation. Fast forward, Bitcoin now is held by family men, and millennials who are starting families. I've gone through this journey recently. Michael has recently, and what you need to have in your Bitcoin custody setup shifts. I think as part of that, you need to know that your family is going to be protected, protected against fiat debasement, yes, but also protected in the event that you get hit by a bus, because a treasure map setup is pretty uncomfortable. You can get it to a place where you're pretty sure it'll work, but you never know. And that 1, 2, 5% chance is pretty awful. And so I think that is also part of this story of Bitcoin custody evolves into being a part of society, and the fabric of society is reliable financial trust, and financial planning. And that's where Bitcoin, has to emerge from the wilderness and become a part of that fabric of society and allow for family planning, really, and family confidence. And multi-institution custody does that in a way that no prior form of custody has been able to do, especially when it comes to the wrench attack possibilities of taking all that responsibility and putting it on yourself and storing it in your house, in various places that now you're just opening yourself up to a form of barbarism that we haven't had to deal with as a society in hundreds of years. And so let's quickly get to a place where we no longer have that risk reintroduced.
Yeah, it's looking at too. People want solutions. They don't want to buy pieces together. So it's kind of like, somebody in the 90s when they wanted a computer, they would go out and they would build their computer and they'd buy pieces off the shelf and they go and they put it all together. So, we're gonna make this work. If we still had to use computers that way today, a lot fewer people would have computers. It's like people just like, I'm going to go to Best Buy or I want to go to the Apple Store. I just want to buy the computer and it work and I want to tinker with it. All the same pieces are in there, but somebody else has sold them a solution. So we have, we built the technology over the last 15 years. Now the solutions are being built. And multi-institution custody is a solution that scales Bitcoin custody to the masses. It is safe and secure. And I would argue it has there is no perfect way to do anything in technology. There are always trade-offs. I would argue that multi-institution custody has the best. If you're looking at pros and cons list, it has the most in the pros list of any custody model, and I think it's the one that scales from somebody that's 80 and that just knows they need some Bitcoin but they don't want to deal with it, or someone that's 20 and they travel around a lot, like, I don't want to hold these keys. It scales for everybody, just as in the same way like the iPhone was a great smartphone for everybody, regardless of your tech savviness. Bitcoin and multi-institution custody is the way that scales the same way. It really is, to me, the iPhone of Bitcoin custody.
Yeah, maybe one thing we could do now is I kind of want to zoom out for a second outside of just multi-institution and talk about risks, right? Because Jesse, one thing that you mentioned, and really the entire topic of this conversation, is evolution of custody, right? Custody is a solution that evolves as the market and risk structure evolves, right? So I'm curious to hear the group's thoughts on thinking through 2024, this next cycle, and a cycle from now, right? Like, let's think about the next 5 years for Bitcoin custody. What are some risks that maybe are increasing in your opinion or decreasing, right? Because risk is always going to be a vector. These risks are never static. Things change on a daily basis, monthly basis, or yearly basis. So I'm curious to hear the group's thoughts, whether it's just in conversations building the business or maybe paying attention to other developments within the industry. What do you guys see as risks that maybe people are underappreciating versus overappreciating in the market, and how do people think about mitigating some of these risks and as they develop?
I mean, the first thing that comes to mind is, and I'll throw it back after sharing the statement to you, Jackson, because you have a lot of these conversations, is more institutions don't catch up on this cycle. And we have orders of magnitude of liquidity issues, right? Because at the end of the day, Bitcoin's a volatile asset, and it's the most volatile asset we've probably ever seen, specifically if you're coming from TradFi. And so if you get caught off sides, it's unfriendly, and people end up insolvent, people, custodial losses, exit scams. There's all these things that happen. And it's been very positive to see folks from Schwab join the firm, pensions that we're working with in the UK. So it's good to see institutional investors grok this, because we've seen carnage the past 15 years, but we're still very early. And my fear, the risk is that more capital is going to come in, orders of magnitude more capital this next cycle, and that there's just going to be losses again. There's going to be another, I don't know exact time frame, obviously, but curious, like Jackson, on your side, because you have a lot of these conversations, where do you agree with that, or where do you see risks outside of that?
Yeah, one area that is probably not a surprise to any of you and won't be a surprise to the audience because they're thinking about it in many cases, is I think people tend to over-index against hypothetical future kind of tail risk events. One example of that being a 6102, right? Everyone likes to think about what happened 100 years ago as it related to the U.S. government's actions and confiscation of gold from private citizens within the country, right? And there's a couple things to call out there. First and foremost, I think only about 25% of private ownership of gold was actually successfully confiscated. So now you kind of think about that and extrapolate to a digital bearer asset that doesn't, it's kind of weird, right? It lives somewhere and nowhere at the same time. And what I think people oftentimes fall into is they over-index to these things that they don't exist today. It's good to be aware of them, and I wouldn't discount it personally, but you're in many cases over-indexing to something that could happen, but it doesn't happen right now. But what could happen today, and things that we face, Bradley, an example you pointed out is traveling, right? People travel very frequently, personally, for business. How do you manage keys if you're leaving for a week for a vacation, or you're leaving for 2 weeks for a business trip, right? Do you bring the keys with you? Are they secured within your home? Are they secured at another location? How do you perform any sort of key checks while you're away? Another thing we already talked about is inheritance. This is, if you're using Bitcoin as your primary store of value, and it's a very much a bedrock of your financial plan, you need to absolutely have a way to pass those assets down. And that is, in my opinion, much more important than thinking about what could happen if the U.S. government or some people even go as far as to say governments globally will coordinate attack on Bitcoin, which we could unpack that. I think it's a very, very low risk and it would be extremely hard to pull off. But there's, of course, ways to mitigate that, right? Like multi-jurisdiction, multi-institution custody is a form of third-party custody that mitigates these risks. So you're not trusting yourself with all of your Bitcoin and opening up trade-offs as it relates to human error and traveling and inheritance, but you're also not trusting one institution that if the government did, on a dime change their entire position, which would be unlikely, there would probably be a lot of messaging and you'd kind of be able to anticipate something like that happening. But if it did happen on a dime, you would be in a pretty tough spot if you had all of your Bitcoin in one omnibus account at, a U.S. regulated exchange. But if your Bitcoin is held and not controlled by one independent institution, but there's governance and decentralization baked into how the keys are managed, and they're in multiple jurisdictions, and no institution can turn keys over to the government, then you've effectively removed or really mitigated that risk. So hopefully that helps as context. I think these are typically the conversations that I'm having with folks is, how do you actually approach this personally at an individual level, or if you're a business, how do you think about this as well? And I try to anchor back to what are actually the circumstances today, and what are the higher probability risks, and what are increasing versus what might be decreasing in the market.
Yeah, I think about I think there's the potential for personal tragedy that I think is probably a acute risk for the individual. I don't think Bitcoin has a ton of risk in terms of its continued success and growth, but the individual can screw up along the way, and I think there are discrete risks for the individual and how they custody, whether they choose self-custody or third-party custody, that are higher than people generally think. I think a great example of this is right now there's some network, probably several networks of hackers who are really social engineering hackers who are, through a variety of methods, are gaining people's cell phone numbers because you're on some ledger hardware contact info leak from 3 years ago, or other personal information leaks, and people are getting contacted by these hackers who are making themselves sound like customer service tech support for various crypto platforms. Maybe it's Coinbase, maybe it's Ledger, and these guys are really good. There's a interview that Junseth did, an impromptu interview he got with one of these hackers who called him, and then he managed to get this guy to talk about everything they do. And the first 5-10 minutes of that call was this guy thinking he was making headway on effectively social engineering Junseth while Junseth was playing along, but it was really good. It sounded right. It sounded like the real deal. And who knows how many individuals will fall for that, or have already fallen for that, and could, going forward, accidentally hand over their Coinbase login credentials and have those hackers sweep the account. That happens every day, and we don't think about it because Coinbase isn't hacked. And I think that's why we don't think about that as a risk, because Coinbase's security has never been hacked. At least that I'm aware of, and from a pure security point of view, it is sound. However, you can be social engineered to give up your credentials, and then your account gets swept. And Coinbase didn't do anything wrong; you screwed up. So I think that's the risk to the individual, and of course, there's also the wrench attack risk, and we're starting to see more sophisticated criminal networks targeting people who have wealth, and it's there are some who are doing this with crypto. I think you can only imagine how the price of Bitcoin 5-10x is. There's going to be a lot more of that, targeting wrench attacks, targeting the individual who's keeping their keys at home. And then I think the big hidden risk for individuals and institutions is that people are keeping themselves from a larger Bitcoin allocation because they're uncomfortable with their options of self-custody or third-party custody. And so that's a big risk, that you are keeping yourself out of the game, even though you know where this is going, because it's uncomfortable, because you don't want to lose the farm, because it's just psychologically untenable to take that risk on of self-custody or third-party custody. And so in doing that, you're running this risk of missing out. You have put yourself on the sideline, at least partly. Maybe you have a 5% allocation, but you would have a 20% if you felt more comfortable about custody. Well, you're missing out on a 15% allocation right there. And so I think that's an epidemic of fear out there about Bitcoin that is probably the single biggest risk that people run with regard to custody. It's nobody feels really comfortable, and so they're counting themselves out of the game.
That's a great, like, working backwards really quick. You hit on two really important things, I think, for listeners, and as we share this is I always thought about Onramp as like the price appreciates is less for the hardcore Bitcoiner, like our friend. It's for their family member that has, I always think like somebody that has whatever their percentage is, unless they've gone very deep and figured out how to make it as close to bulletproof as possible, they want 10x the version. So if they have 1%, they want 10%. If they got all the way to a double digit percentage of their net worth, they really want 100%, but they haven't figured out, to Jesse's point, how to make it bulletproof. And that's where those numbers you hear about 200 million people own Bitcoin. It's reality. It's like 0.01% of that. It's just people have $5 on Coinbase or $1,000 in the ETF on their IRA or whatever. So I think sharing this, always want to work with them. The other one is honestly, I think the biggest blind spot in this whole setup from the smartest, most educated people in the space of the notion that we're all going to hold our keys in the same way that, like, there's a reason why we don't hold gold underneath our mattress. And for thousands of years, institutions that have existed and we had to build trust circles around them. And it's not to say it has to look exactly the same, but there's these two things that are happening currently that everybody, I think, would agree on. You have the right side, which is the digital sphere, and everybody that's sophisticated online is trying to get your Bitcoin. Jesse called out Coinbase. There's all the different, North Korean hackers. There's all these groups that are all day online, like to the point we don't even use our phones anymore. And then, and there's always a connection between your phone and your exchange server. So I think ideally most folks that are listening to this would know to keep their Bitcoin off of an exchange. The other side that I think gets discounted and not brought up enough is I can't imagine any city that anybody's living in where crime has gone down. Just full stop. Maybe across the world, there's probably like top 5-10 cities. Everything else is up and to the right. We're in a bull market for whatever's happening from a defunding, from a societal situation. But those are generally been pretty segregated, right? So you have the digital folks online trying to get your Bitcoin. You have physical people, mugging, breaking into houses. Those haven't merged together. And what Jesse called out was that as the price goes to 2, 5, 10x, those things will naturally converge, where you're going to have physical people that are physical harm that's generally done maps to the digital world, and understanding people hold Bitcoin because there's not many places you can hold your private keys other than your home. You leave it in a bank. Well, they're not open, after 5 o'clock and on weekends. So good luck with that. Like multiple houses, maybe. So this notion of like all of our data is out there, whether it's all the CRM leaks from every exchange, collaborative custody providers been hacked. It'll be hacked. God forbid ours will probably one day. It's just, this is what happens with data. It doesn't want to be centralized. So it ends up somewhere. You map that with all the AI tools that are out there. You can pretty much discern how much Bitcoin almost everybody owns. So now what happens when the price is 100K, 150K, 350K? And now you can figure out that somebody's holding $4.5 million in BTC, $35.7 million in Bitcoin. And now you have kids at home and you go to work and you go on vacation. Like, what is the end game? What is the plan? And then you need to access the Bitcoin because you got to pay for the doctor bill. Or are you going to like show? Because the logic of violence changes in that scenario because now people are watching where you go. Right now it doesn't matter because it's $350,000 in multi-sig collaborative custody. But what happens when it's 3.5 million? Like it all changes. And so it just doesn't get talked about because I don't think people have had to go through that. And it's just like anchored to not your keys, not your coin. Don't trust anyone. Well, I mean, that only works until kind of you hit that inflection point, and I think this is kind of what we're talking about here.
I think the risk to the individual, I would echo what both of you all said, specifically around inheritance. Security and inheritance are, to me, the two biggest ones. And that, to me, is where multi-institution custody really solves that. I think the risk to the industry is something that I've not heard anybody talk about, is that we get frustrated that people want solutions instead of buying parts. And just as like, it's kind of like that Jeff Bezos quote, your margin is my opportunity. There is a lot of opportunity in selling solutions here. And that's why I think Onramp is really set up very well in the coming years, because it's selling a solution. And it's okay if people don't want to physically hold keys. And it's okay if people don't care about the latest roll-ups. And it's okay if they actually don't care about Bitcoin at all. They just want their money to stop being worse. And like, I think, there are people out there that, like, if they went to their bank and their bank was the only place that, like, again, let's say their bank had a multi-institution custody, but they just like went to the local bank and it's like, hey, we've converted your dollars to Bitcoin and we have this custody agreement. It's like, okay, like, the people don't care. And like that, and I think we often forget about that. Like, generally people just don't care about this. Like, if you're, a plumber, you just like want to go do your job, help your customers and make money, and you want your money to work for you. That's who the industry needs to be focusing, building on, is the people that actually don't care about Bitcoin. Just as in the same way as like people can like not care about, SSL and HTTPS and like the latest enhancements in like, security. They just want their phone and their apps to work. They just want it to go about their lives. And so as an industry, like, we need to keep building solutions for people that absolutely do not care about Bitcoin, because those are the people, when they come to Bitcoin, because it's just like what everybody's doing, just in the same way everybody came to smartphones, everybody came to the internet. Like, we need solutions that are turnkey for them. And that's, to me, why I'm so passionate about multi-institution custody.
Yeah, it's funny, we forgot, there's a reason why the division of labor exists. And it's like, it anchors to the one that's like, it's not hard to, hold 12 words or self-custody. It's like, it's not hard to do $10. Try doing 50% of your net worth and let's see how easy it is. It's just like, it's just the notion of it's not the same thing. And it's just treated as the same.
Yeah. And I remember years ago, listening to podcasts about collaborative custody, about multi-sig in general. And the talk then was, eventually you'll have like your accountant hold a key in his office, and maybe your lawyer will hold a key in their office, and then you'll have one at home, and then you've got some geographic distribution there, and that'll be how people do this. But that doesn't really make sense, because they're not experts and they don't quite have the right incentives. Really, what you want to do is you want to hire a key holder whose business is doing this, who's best in class at holding a key, keeping it safe, and signing when the appropriate, conditions are met. And that's what multi-institution custody actually is. And so it's funny, there was this sort of half-baked notion of how you'd eventually have some distribution of who's holding the key and geographic separation of the keys. But it was always half-baked, and here is the baked version of it, where you have a marketplace for key holders. You're when you come to Onramp, you're hiring the best in the world at holding keys on your behalf, because we've partnered with the best in the world to hold keys in a multi-sig quorum and sign when the appropriate conditions are met on your behalf. And so, it's a natural evolution of this entire journey of Bitcoin custody over the last 15 years. And it's really the dawn of a new era of a format of custody that's simply not possible with traditional assets. You can't do this with stocks, bonds, gold, real estate. And it's going to open up a lot of new capital to Bitcoin, because it's going to lower the risks inherent in holding Bitcoin. And it's going to secure a lot of families' financial worlds and enable them to have the kind of freedom that Bitcoin has always promised. And the security side of custody has always been that nagging requirement that weighs heavily on the individual and on the person, usually the guy in the family who thinks that this is a great asset to hold, but it comes with some nerves holding it at home or wherever you do. And so, this is I guess to bring it full circle, this is that next step in the technological progression of Bitcoin custody, where we go from highly technical, less user-friendly forms of custody to more user-friendly, less technical, more professionalized forms of Bitcoin custody.
Yeah, and that's a really key point, professionalized, because these concepts, they don't get talked about enough. It's less about because the incentives aren't there. It's just because most people haven't had the background and experiences, because there's two sides. It's one, understanding Bitcoin deeply, but even more than that, it's understanding the world and commercialization of technology and how it's going to be introduced. And so coming to Onramp, there's a technology component, but then there's a professional experience with, historically, like going back to Bradley's point, people want solutions. And historically, people have only had problems when they allocate to Bitcoin because you've played hot potato with the asset. You're basically just going from exchange to this next one's trust company just got hacked. And now I don't know if they're going to let me take my Bitcoin or my IRA. Like, it's just hot potato. Now my collaborative custody doesn't work. It's called Onramp for a lot of reasons. And one of them is you start with this custody format, but as we grow, whether it's multi-jurisdictional, if you want to hold a percentage potentially in the future with the keys, so you can always have control. There's a lot of things we're talking about. There is a world, though, that in multi-institution custody, you can open up a whole new dawn of financial products that reduce counterparty risk, but allow you to still have this notion that one single entity doesn't hold unilateral control. Insurance is just an easy example, right? Because you can't historically insure all of Coinbase's assets, and you also can't insure your assets if you're holding them by yourself. There's no shortage of other things that we have planned in the market. We're working, again, we mentioned the pensions in the UK. We think that in the future state, publicly traded funds, i.e. ETFs, will be held in this format. They've called it bulletproof. It makes complete sense why you would not want tens of thousands, if not hundreds of thousands of Bitcoin sitting with a single custodian that can lose it all. So I think that's the second part. It's technology mixed with humans are really where we're driving this kind of forward when it comes to financial services built on it.
Yeah, and on the technology piece too, maybe just one final thought before we get to wrapping here is for the folks that are a little bit more technical and more savvy and want additional assurances, you may want to know that while you are allowing third parties to manage keys on your behalf, again, it is multi-institution, none of them control it, and they only sign at your direction. And the kicker here is that when you log in to your client dashboard, you can take your address and you can plug it into a public block explorer node, and you can verify this on chain, right? So to Bradley's point earlier in the episode, we want to live in a world where you still trust institutions, but in that same vein, this is still a trust minimized solution because you're not trusting one institution, and you can always verify it yourself as well. So I think that's something that I often overlooked in the past, and now I really do make it a point to share with folks in conversation because it is important. It's not going to be important to the net new buyer of Bitcoin, but it will be important to someone who's owned it since 2017 and has a sizable portion and wants that additional transparency and visibility into how the assets are held. So with that, any final thoughts here before we close it down?
I think for me, if anybody's listening to this and say, well, I don't have enough Bitcoin to need a solution like this, book a consultation, chat with the Onramp team. I promise you, you'll be blown away by it. And even if it's not the right solution for you today, you want to learn about it because to me, again, this is the model that scales up. Jackson, you're talking about trust, there is trust everywhere. Even if you manage your own keys yourself, you're still trusting Apple, you're still trusting Dell, you're still trusting your internet provider, you're still trusting the maker of the USB cord, you're still trusting all these things. And one of the things that I would kind of leave you to think about is, again, the inheritance was huge for me. And, we've seen, I've seen so many connectors and things and protocols come in my life for communication. Imagine if you just put, if you have your Bitcoin hardware signed device and put it in a drawer and it sits in there for 30 years, do you think that, how are you going to connect that particular device to your computer 30 years from now. It's probably going to have, it's not going to have the same cord. And those are the things you have to think about when you take and physically hold keys. You're having a technical burden that you're going to have to think through, over the years as technology evolves. You're going to have to think through that. When you come to Onramp and multi-institution custody, you don't have to think about that. You're getting to enjoy the benefits of Bitcoin's adoption without having to, hang on the bumpy ride along the way as the technology evolves. As Bitcoin evolves as a protocol, Onramp and its key providers will be right there along with it. Always having the best in class security, always having the best in class way to interact with the protocol. And again, to me, it was very, when I came to Onramp, it was very big to me that I run my own node. I can view my wallet on my own node, trust but verify. And again, even if you start slowly with your multi-institution custody vault, I promise you, as Bitcoin's price rises, you will find yourself more and more feeling less confident technically and physically, managing your own keys. And you'll want to partner with Onramp and its key providers. I promise you that.
Yeah. Well, thanks, Bradley. Michael,
I think
some thoughts?
Yeah, only thing to call out, because I think maybe we didn't fully specify, is that multisig is only native to the Bitcoin protocol, which is important because it's effectively interoperable with any other public-private key pair, in the sense that this is technology that the largest custodians in the world, specifically like Coinbase and BitGo, use. So there's nothing different here out from a technical perspective. What's different is really from a legal and social construct perspective. So you have relationships with multiple custodians and they move at the direction of you, and we provide financial services, client services around it. I think that's just important to call out, because ultimately when we say this scales and helps Bitcoin's adoption, some folks may not fully grok that this technology is interoperable and allows for different levels from different places all over around the world to participate where other technologies don't, that generally use crypto assets. And that's why you don't see this approach very often. But as Bitcoin's price rises, and I think we were recently at 60% dominance in the crypto sphere, more and more people will wake up to Bitcoin's significance and why you would want to custody in a different way.
Yeah, well said. Well, Bradley, thanks for joining us this week. Really appreciate your generosity with your time. Michael and Jesse, good conversation as always. And Brian had to jump early, but Brian did a great job with the report and sharing some thoughts earlier. So for folks that want to find the report, just check out our website, onrampbitcoin.com. You'll see it right there on the homepage. You'll be able to download the report, read it through it yourself, and share with any friends, family, colleagues. We'll also be hosting the webinar on the evolution of Bitcoin custody. That'll be on September 10th. We'll include the information in the show notes to find more details there and register. And we look forward to speaking with you. If you want to reach out and discuss any of the things that we talked about today, we're always welcoming new conversations, opportunities to jump on a call. So just go to our website and you can schedule a consultation right there and connect with any of us.
Awesome.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.